Confirm the audio video quality so that we could proceed. So kindly please do confirm the audio video quality over here so that we could proceed. And we will be covering the case studies most importantly related to the different modules of ABM over here. So audio video quality जल्दी से जल्दी कंफर्म कर दीजिए ताकि आज का जो क्लास है हम इसे स्टार्ट कर पाए. Please do confirm the audio video quality over here. And further, let me tell you that in BFM itself, so over here we have already basically going to start the video for the ABM itself, but let me tell you that just let me give you a gist over there related to BFM. that BFM की अगर तैयारी कर रहे हैं तो BFM में आपको मॉड्यूल A and मॉड्यूल B को अच्छे से कर लेना. Okay, so audio video quality over here seems to be working very fine. So let us start the session now. So first case study over here, it is related to the confidence interval. It is related to confidence interval. So an undergraduate is interested in purchasing a used TV. She randomly selected 125 advertisements and found that average price of the TV in the sample was 3250. The average price in the sample was 3250. She knows that the standard deviation of the used TV price in the city is rupees 615. So what did it indicate? So we are provided with the data and we are given with that there is an indefinite population in the district over there, and further an undergraduate is basically selected a set of 125 advertisements. So we can take it as a sample over there. So 125 is the sample size. So n is equal to 125, and further it is given that the average price of the TV is given to be 3250. So what is the average price related to the sample over here? So related to the sample, the average price is given to be rupees 3250, that we are provided with the X bar. We are provided with the X bar over here, that is 3250. And further, she knows advertisement and found that the average price of the TV in the sample was 3250. She knows that the standard deviation of the used price in the city is rupees 650. So standard deviation in the city is given to be what? So sigma we are provided with, that is a population standard deviation, and it is given to be 615. Okay, and based upon that you need to establish an interval estimate for an average price of a TV so that she can be 68.3% certain that the population mean lies within in this particular interval. So what is the scenario over here? So we are having a sample of 125 and further you are having a population. So you want to find an interval. So from the sample data itself, you want to find out an interval where you will be 68.3% sure that whatsoever the value is picked from the population, it will be lying in the selected interval over there. Is that clear? So that is the scenario that we need to solve. And let me tell you that the sample size over here is greater than what? Sample size is greater than 30. So central limit theorem will be applicable. As per that particular theorem, x bar is equal to mu, and further sigma x bar is equal to sigma divided by under root n. This is as per the CLT over there, and further we are provided with the x bar, so mu will also be equal to 3250. Further we are provided the value of n, so we can do calculate the sigma x bar, that is related to standard deviation of the sample mean over there. So that is how we can do calculate it. So sigma is basically what? Sigma is given to be 615 over here. Under root n means 125 under root, and we can simply solve it on the simple calculator. Do not forget to carry your simple calculator along with you. So 125 under root, it comes out to be 11.180. So 615 divided by 11.180, and that comes out to be 55. And that comes out to be 55. So sigma x bar value is a 55 over here. And if you want to establish an interval related to what? Related with where you can be 68.3% certain. In that case, you will be adding and subtracting. You will be adding and subtracting one multiplier of the standard deviation, and that would be the answer. So we are having the mean equal to 3250. And what is the formula related to it? It is plus minus z into sigma x bar for 68.3% of the probability, for 68.3% of the certainty. Okay, so it will be 3250 plus minus 1 for this particular z value. For 68.3%, z will be equal to 1. So multiplied by the standard deviation for the sample mean, that is 55 over here, and that would be the answer. So 3250 plus 55, that is equal to 3305. That is equal to 3305, and the second one it would be related to 3250 minus 55, that is equal to 3195. So right answer over here has been given by the Sunil Kumar at the earliest. So this will be the interval. This would be the interval over here that was to be established. Is that clear? Okay. Now let's move to the next question over here, and it says that establish an interval estimate of for the average price of the TV so that she can be 95.5% certain. And if we want a person to get to be certain 95.5%, I'm just telling you for 68.3% it would be plus minus 1 sigma x bar, that is to be subtracted from the value over there. And for 95.5% of the certainty, for 95.5% of the certainty, 2 times of the sigma x bar is to be basically 2 times of the sigma x bar is to be added and subtracted for the interval over here. Okay, so we have already calculated the sigma x bar over here, that is 55. So what will be the established interval? It will be 3250 plus minus 2 times of 55, that is 110 over here. Okay, so 3250 plus 110, that is equal to the upper confidence limit will be equal to 3360, and the lower confidence limit will be equal to 3250 minus 110, that is equal to 3140. So that would be the established interval for the second case over here. Is that clear? So that would be related to this particular question. That would be related to this particular question. So now let's move to the next question over here, and it's related to the confidence interval again. So it says a CHS manager wants to inform potential renters about how much electricity they can expect to use during each month. About how much electricity they can expect to use during each month. She randomly selected 61 residents. So 61 residents were selected. Now the sample size over here, that is sample size is represented by small n, and it is given to be 61, and discovers in August to be 894 kilowatt hour. So the average usage in August was 894 kilowatt hours. So we are provided with the x bar. That is 894. That is 894. Further, she believed the variance in usage is about 131 kilowatt hour square. Okay. So variance is represented by sigma square. That is, variance is basically related over here not to the sample, but it is related to the population over here. Okay. So sigma square is given to be what? It is given to be 131. It is given to be 131 over here, and we need to establish an interval to estimate the average usage for August electricity usage so that she can be 68.3% certain that the true population mean will lie within this interval. Okay, so over here we need to establish an interval for 68.3% certainty. So what will be the answer? It will be related to the 894 plus minus sigma x bar, 1 time of the sigma x bar for 68.3% of the certainty. Now how we will be calculating sigma x bar? Same thing over here, because it is indefinite population and further CLT is applicable over here because n is greater than 30. So in that case, sigma x bar is equal to sigma divided by under root n. We are provided with the variance. See, we are provided with the variance over here, but not with the standard deviation. How we can calculate the standard deviation from the variance? By taking an under root of 131. So it is 131 under root of the same, and that is equal to 11.44. So it is 11.44 divided by under root of 61. So 61 square root is equal to 7.810. So 11.44 divided by 7.810. So 11.44 divided by 7.810, and that comes out to be 1.464. So that is the standard deviation in this particular case, and that is the limit that we can get from over here. So that will be equal to what? So 894, that was the average usage. So 894 plus 1.464, that is equal to 895.464. that will be the upper limit. And what will be the lower limit? It will be 894 minus 1.464, that is equal to 892.536. 892.536. So that will be the interval over here. So who has answered correctly at the earliest? So in this case particularly, Jagrit Dhiman has answered correctly. Over here. So that would be the answer over here. We have performed the same steps related to the x bar plus minus the 1 point plus minus the sigma x bar over here. Okay. So someone asked over here that from where we will be getting the z value in this particular case. So it may be the case that you are to basically establish an interval for 99.7% of the certainty. What if you are to establish a interval for 99.7% certainty over there? In that particular case, first of all, convert it to a decimal part, so it will be 0.997. And if you are aware, we previously covered in our last video also, that was related to what? That is, the curve is symmetric around the curve is symmetric over there. The curve is symmetric over there. So in that particular case, this particular half is having the probability of 0.5, and also this particular half is having the probability of 0.5. So in total, its probability is equal to what? It is equal to 1. As we know, the probability ranges from 0 to 1 over here. Okay, so that is the case over there. And further, let me tell you in this case particularly, let me tell you that in this case particularly, we are having the total value. So we will be dividing it by 2. So it will come out to be 0.997 divided by 2. That comes out to be 0.4985. 0.4985. That is the value that we have got over here. And we can check this value. We can check this value in the Z table itself. So over here, you are basically able to locate the Z table value. It will be either given to you in the question itself, but let me tell you that you need to remember important values like for 99.7%, for 99.9%, and for 95.5%, I already told you it is 2 times of the sigma x bar, and for 68.3% it is 1 time of the sigma x bar. Okay, so these are the values that you need to remember. These are the values that you need to memorize over there. So for 0.4985, so the value would be somewhat over here, 0.4985. It would be this one. This would be the value. So the value is 2.96. So the value over here for the Z value, because over here we are having the 2.9 over here, and this particular value was related to 6. Okay, that will be 2.96. So if we are to establish an interval for 99.7% certainty, in that case we will be using the formula like x bar plus minus 2.96 times of sigma x bar. That is what the value we will be using in that particular case. Is that clear? Is that particular part clear over here? Are you getting this particular point? Okay, otherwise the Z value you need to memorize itself. Okay, so now let's move to the next question. Let's move to the next question, that is, establish an interval estimate for the average August electricity usage so he can be 99.7% certain. So we have already actually calculated the value for in the previous case. What was the value of the sigma x bar that we calculated? What was the value of the sigma x bar we calculated? It was 11.1 something divided by under root of 61, if I'm not wrong. And what was the value? Kindly please do let me know the value. I just rubbed the I've already raised the value over there. What was the value? So 131 under root, that is 11.44, and for the 61 under root, that is 7.81. 11.44 divided by 7.81, and it was 1.464. It was 1.464. Okay, and further for 99.7%, I already told you, first of all we converted into the decimal part, and further we divided it by 2, and then further we checked the value. Okay, so that was the value related to the Z table, and that is to be applied over here, and that is to be applied over here. Is that clear? So what will be the established interval? Which I just told you that it is 2.96. It was 2.96. So the interval will be x bar plus minus 2.96 times of the 1.464. So 1.464 multiplied by 2.96, that is equal to 4.33. 4.33. So what was the value over here? So in previous case, just let me tell you that what was the average? It was 894. It was 894. So the interval will be 894 plus minus 4.33. So it will be 898.33, and up to the lower confidence limit will be 894 minus 4.33, that is equal to 889.67. So that would be the value in this particular case. That would be the interval in this particular case. Okay, let's move further. It is related again to the confidence interval, but it is somewhat different, because in this particular case we are going to calculate the interval and confidence interval from the proportion itself. So what is proportion? So let me tell you that over here we are having a population from which we have having a certain number of the proportion in this particular case. And further, if I say that 5% of people in this particular sample are educated, and the other are illiterate, so 5% people are literate and the other are illiterate. In that particular case, what will be the proportion? If I say that literate persons are success for me, in that case, the proportion related to this, will be, the probability would be related to 0.05. That will be 0.05, and 0.95 would be the failure. So the success rate would be 0.05, probability with the success is 0.05, and probability for the failure would be 0.95. Okay, is that clear? So in the same manner, we will be basically solving this, and for this particular purpose, binomial distribution was used. And further, let me tell you the formula related to it, that is a sigma x bar is equal to the p cubed under root divided by n under root. So that is the formula that you need to use. So that is a formula relatedly that you need to use. That is a standard error. Okay, so over here we are provided with the question which says a computer store that buys wholesale untested computer chips is considering switching to another supplier who would provide tested and guaranteed chips for a higher price. In order to determine whether this is a cost-effective plan, Pascal must determine the proportion of faulty chips the current supplier provides. So the faulty chips is a success for us. A sample of 200 chips were tested. So n is given to be 200. So the small n over here is given to be 200 over there. And further, out of these, 5% were found to be defective. 5% were found to be defective. And how we can calculate it? So 5% were found to be defective. So success basically, probability is basically represented by a small p. So it will be 0.05. And further, the q value, that is a probability of failure, that will be 1 minus 0.05, that is equal to 0.95. Okay, so what will be the sigma x bar? That will be equal to 0.05 and further multiplied by 0.95 and divided by n, divided by small n, that is equal to, that is given to be 200 over here. So that is how we can calculate sigma x bar over here. The value would be equal to 0.05 multiplied by 0.95 divided by 200 under root, that is equal to 0.05 multiplied by 0.95 divided by 200, that is equal to 0.015. That is a standard error in this particular case. So question over here was related to this only. That was related to estimate the standard error of the proportion. So that is just, we just estimated now. What is the standard error? It is 0.015. It is 0.015. And further, that was related to, over here we need to construct a 98% confidence interval for the proportion of defective chips supplied. And we need to establish an interval. For 98% of the confidence interval level. Over here. And for this particular purpose, we need to calculate the value over here. That is a standard deviation we will be calculating. So it is basically PQ under root. So P over here is 0.05 multiplied by 0.95 and under root of the same, that is 0.9746. So 0.95 multiplied by 0.05, that is equal to 0.0475 and that is 0.217. That is equal to 0.2971 over here. Is that clear? So we were provided with the number of trails. First of all, let me just repeat this for you. So we were provided with the number of trails, that is equal to the 200 over here, that is a small n was given. And further, we were provided that we wanted to check the faulty chips over there. So we basically get to know what, that the probability of success is 5% only. The proportion related to success is 5%. So probability for failure would be equal to what? 1 minus 0.05, that is 0.95 in this particular case. So standard deviation we just calculated by under root PQ, and that comes out to be what? That comes out to be 0.2179. and further we calculated the standard error. Over here we calculated the standard error. In that particular case, it comes out to be 0.015. It comes out to be 0.015. Is that clear? See, for mu value, for mu, if you want to calculate the mu, that is, if you want to calculate the mu, that will be related, that will be equal to what? That would be equal to what? It is basically, yes, it is NPQ. Yes, definitely it is NPQ, not PQ only. It is NPQ. And mu is equal to what? What will be the related formula to mu? What would be the related formula of mu? It is NP. It is NP. And what is N actually? N is 200. And further multiplied by 0.05. Multiplied by 0.05, that is equal to 10. So mu over here is equal to 10. How we can do calculate mu? Mu is equal to NP only. I just missed N over here. So standard deviation is NPQ over here, but it is to be converted into the number of successes over there. So we will be dividing it by N. So we are to divide it by N. That is why it is under root of NPQ. That is why it was just converted into this particular part. Is that clear? Okay. So over here we need to establish the interval. Over here we need to establish the interval. So mu we just calculated, that is equal to NP. So for the question purpose itself, because it is related to proportions, you just need to memorize that the standard error is equal to what? Standard error is equal to PQ divided by N. As per the binomial distribution, let me just tell you some of the history related to it. So the standard deviation or the standard error, it was equal to NPQ under root. It is NPQ under root. But for the purpose of converting the proportion to the number of successes, we'll be dividing it by N. So NPQ divided by N, and it will become what? It will become PQ divided by N under root. Okay, so that is just, we just calculated over here, and further we calculated mu is equal to NP. So N is over here is equal to 200 and multiplied by 0.05, that is equal to 10 over here. So what will be the interval? What will be the established interval? It will be 10 plus minus 0.015. 0.015, that will be the interval. So it is 10 minus 0.015, that is equal to 9.985 to 10.015. So that will be the interval. Is that clear? Is that particular part clear over here? Yes, for this was for 68.3%. But as per the question, yes, I'm just coming to that particular part only. For over here, we established interval for 68.3% of the certainty. For 68.3% of the certainty, that is one time of this particular only. Okay, but over here, if we are to basically establish the interval for 98%, for 98%, what will be the value? What will be the value? So it will be, first of all, converting it into the decimal part, that is 0.98, and further dividing it by 2, that is 0.98 divided by 2, that will basically equal to 0.49. That is equal to 0.49. Now we will be looking at the value at the Z table over here. Z table over here. Let me just rub this over here so that we can look at the values. So 0.49 simply. 0.49. So it is, let me check the value over here. Yeah, here we just got it. So it is equal to 0.4901. That is 2.33. So for this particular value, Z value is 2.33. So what will be the answer? It is 10 plus minus 0.015 multiplied by 2.33. Okay, so that will be the interval for 98% of the certainty. For 98% of the certainty, over here was the value, that is 2.33 over here. This was the value, this particular value. Is that clear? Okay, so 0.015 multiplied by 2.33, that comes out to be 0.3495. 0.3495. So 10.0395 to 10 minus 0.0395, that is equal to 9.9605. So that is the interval. That is the interval. Definitely we need to calculate the standard deviation. I just told you that whether when it was related to proportions only, we just calculated by the method standard deviation by proportion only, it was equal to npq under root. But we need to convert it into the number of successes. We need to convert it to number of successes, so we divide it by n over here. That is why it just become pq and divided by n under root. That is why it is equal to this. Okay. You need to memorize some of the values related to it. Likewise for 98%, 99.5, 99.7. Okay, so those values are to be memorized by you. Let's move further to the next case study. It's related to the case study is related to the DER current ratio and the quick ratio. Okay, so we are provided with the different values that is related to cash, debtors, inventories, current liabilities, and the total current assets over here. And we need to calculate the quick ratio. So quick assets or a quick ratio is said to be what? Quick ratio is also said to be asset test ratio or the liquidity ratio. Okay, and what is the formula related to it? It is quick assets divided by the current liabilities. So in case of quick assets, we do not consider the stocks, we do not consider the prepaid expenses over there. So over here, we will not be considering the inventories while basically calculating the quick assets over here. So as per the question, we will not be considering it. So what will be the amount of the quick assets? So cash and debtors are quick assets over here. So the value is 3 lakhs, and further the current liabilities are given to be 2 lakh. These are given to be 2 lakh. So what will be the value of quick assets? It will be equal to 1.5:1. So the value of the quick assets will be equal to 1.5:1, and Rahul Singh Rajput has answered correctly at the earliest over here. So that was quite simple. So liquidity ratios just tell us that even if we would be able to repay our short-term obligations or not. Okay, let's move to the next question. It says current ratio of the unit, it is 1.33. The current ratio of the unit is given to be what? It is given to be 3:1. The current ratio is given to be 3:1. The quick ratio is given to be 1:1. Level of the current assets is 15 lakh. What is the amount of quick assets? What is the amount of the quick assets? So we are provided with the current ratio, that is equal to current assets divided by the current liabilities. That is equal to what? That is equal to 3:1. And further, we are given with the value of the quick ratios, that is equal to quick assets divided by the current liabilities, that is given to be 1:1. And further, we are provided with the value of the current assets. So if we substitute this value over here, we will be getting 15 divided by 3 is equal to current liabilities. Those are basically, we will be getting the current liabilities equal to 5 lakhs. We will be getting the current liabilities equal to 5 lakhs. So if we basically substitute the 5 lakh value in this particular formula, we will be getting the quick assets as equal to 5 lakhs itself. So what will be the answer related to quick assets? It is equal to 5 lakh in this particular case. So kindly please do mention the question number along with your answer so that I could understand which question you are answering. Okay, so 5 lakh would be the right answer over here. So Kavita has answered correctly at the earliest. Okay. In the next question over here, it is given that XYZ Private Limited has following assets and liabilities on 31st of March 2016. We are provided with the non-current assets, current liabilities, and non-current liabilities over here. In first question, we need to calculate the quick ratio. We need to calculate the quick ratio, and that is equal to quick assets divided by the current liabilities. So current liabilities are, we are having the trade payables and the income tax payables, that is equal to 160. So in denominator, we will be having 160, and we need to ascertain the quick assets in this particular case. So we are provided with the value like cash in hand, cash in bank, short-term investments, inventory, receivables. And I just told you that prepaid expenses and further inventory is not to be considered while we are ascertaining the quick assets. So we will be just taking up this value. So 25 plus 50, that is equal to 75. 25 plus 50 is equal to 75 plus 45, that is the short-term investments, plus receivables, that is equal to 100. So it is equal to 220. So it is equal to 220. So it will be equal to what? The quick ratio will be equal to 220 divided by 160. It is equal to 160. How quick ratio is important? Because it tells us that how we can do we have the capacity so as to repay the short-term obligations or not. So if quick ratio is lesser than 1, If quick ratio is lesser than 1, in that particular case, the firm is to borrow the funds for the short term borrowings. Okay. So that is related to the question number 1 over here. And for the next case study is based upon the transactional analysis. The next case study over here, it is based upon the transactional analysis. So what is transactional analysis? Transactional analysis is a way basically related to that how do we communicate with others, what would be our thought process, what would be our attitude and behavior related to that, and that is basically related to the transactional analysis. And further related to this particular concept was given by whom? This particular concept was given by the Eric Berne. It was given by Eric Berne. So if it is asked in the exam itself, by whom the concept was given, it was given by Eric Berne based upon the concepts of the segment fluid. And further he defined that there are we are having the three ego states. Parent, child and adult. Okay. Further, parent is having the two ego types. One, it is a nurturing parent, and the other one, it is a critical parent. Now, nurturing parent is the one parent who is caring and understanding, whereas in the critical parent would be the one which basically criticize the others for their undesirable behavior. If you do not desire some behavior out of your children, out of the society, you will be criticizing it. That is basically critical parent attitude. That is the ego state. That is basically related to ego state. Okay. And further, they are very evaluative and very much judgmental also. They are very evaluative and very much judgmental. And the second ego state, it is related to adult. So when you're adult, you're logical, you're rational enough. So for each and everything you find out the logics. So what would be the logic? How you can find the solution for the same. You're eager for problem solving, for decision making. You basically try to find out the alternatives based upon the facts and figures. Okay. So you're logical enough. That is the adult ego state. Okay. That is the adult ego state. And the third ego state, it is a child ego state. That is a child ego state. So when you're a child, that basically behaves emotionally. You do not go for the facts and figures. You do not look for the logics over there. You don't find your correctiveness or not. You just make judgments. You just make your decisions in emotions. Irrational. You are very much irrational. Decision making is not based upon the logics or rational. And further in the child ego states, there are three stages. One, it is the adopted child. It is an adopted child who adapts that what must be done. You're just basically you're very much environmental. And the second one, it is a natural child. You enjoy every bit of the society. That is a natural child. And the third one, it is a little professor. When you're very much eager, you are very much creative, intuitive, you just find the reasons. Likewise, in the adult states, you find out the reasons. Otherwise, your decisions are basically based upon the emotions, but you're very much basically imaginative. You're indulged in the experiment itself. That is basically related to the child ego states. So I just told you that we are having three ego states. First, it is a parental ego states. We are having the nurturing parents and further the critical parents. And the second one, it is a adult state. And the third one, it is a child state. We are having the three states. Again, adopted child, natural child and little professor. Okay. So now based on that, we will be solving the case study over here. So let me just reduce the some of the size related to over here because, okay, now this is fine. So Mr. X is about 54 years who joined bank 30 years ago. Mr. X over here is an employee. He's 54 years old and he joined the bank 30 years ago and is presently working as manager operations in the city branch. Remained very active and of officer association activities, although but for time now being he deassociated himself with such activities. Okay, so Mr. X is a person who was 54 years old and was working in the bank for the last 30 years. He was very much active. He was also active in the officer association, but now he has deassociated himself from such activities. Today morning, Mr. Suresh, junior clerk, came to his table and sought for his guidance on some issues relating to know your customer documentation guidelines. Mr. X informed Mr. Suresh about the guidelines and directed him to follow, but Mr. Suresh believed the information given by the Mr. X was not current and there were some modification. So here is a scenario that Mr. X is working in bank for a longer period and further in the morning, Mr. Suresh visited Mr. X and asked for the guidance based upon the know your customer guidelines. And further, Mr. X just narrated him some of the guidelines and asked him and directed him to so as to follow them. But Mr. Suresh believed that there were some modifications in the guidelines over there, and Mr. X was not correct. So next morning, Mr. Suresh again went to the table of Mr. X and told him that he has learned the guidelines stands modified, because he was having the curiosity to check now. So he basically looked into the guidelines that further if there is any modification or not. And further, in the next morning, he visited the Mr. X table and just let him know that there were some modifications over there. Further, he also told the changes in the guidelines, that what the modifications were there over there. This eyed Mr. X. So this made Mr. X irritated. Although he did not say anything, but Mr. Suresh, however, could notice that Mr. X has not taken the information well. And further, coming back to his table, Mr. Suresh narrated this incident to the other clerk, stating that Mr. X does not know much in spite of his seniority and experience. Okay, so Mr. S did what? He basically went to the morning and next morning just narrated him that he has found that there were some modifications and you're not aware of, and also told him what the modifications were. And further, there was no positive response from the Mr. X. So he just come back to his table and further just narrated the scenario to the another clerk and told that Mr. X is having the seniority, but he is not experienced at all. Okay. Mr. X overheard this concept and he was badly upset, and in a fit of anger shouting at Mr. Suresh. As a result, Suresh also got angry and maintained that he said nothing that should make Mr. X uncomfortable. Every person, every customer present in the branch, including some customers, were looking at Mr. X. Mr. Chandan, officer who had joined the branch a few months ago, immediately he went to Mr. X. So there was another officer over here who just immediately went to Mr. X so as to pacify him. Okay. And further, he regretted for Suresh's behavior and assured Mr. X that during the lunch break, the staff members will sit together and sort out this issue. Okay. So this is a case study that was given over there from last to last year. And further, based upon that, we need to find out the answers. Okay. So question 1 over here, it says, in which ego state Mr. X directed Mr. Suresh to follow the KYC guidelines as narrated by Mr. X? As narrated by Mr. X. So what will be the answer related to this? So in which ego state Mr. X directed Mr. Suresh to follow the KYC guidelines as narrated by Mr. X? So I just told you that we are having the 3 stages. One is a parent ego state, the adult ego state, and the third one is a child ego state. Now, which ego state it was related with? It is related with the critical parent or nurturing parent. It is related to the parent. It is related to the parent ego state, first of all. But it is what ego state? It is nurturing parent ego state. It is nurturing parent ego state, because out of care, Mr. X directed Mr. Suresh. There was no bad intention. And best of his knowledge, he just provide the knowledge to Mr. Suresh. So which ego state it is? It is nurturing parent ego state. Okay. Now let's move to the next question over here. It says, Mr. X had advised Suresh to follow the instructions as narrated by him. Next day, Mr. Suresh indicated that the instructions narrated by Mr. X are now changed. That which eyed Mr. X. In which ego state the reaction of Mr. X? False. In which ego state the reaction of Mr. X? False. That is related to the question number 2. So Mr. X advised Suresh to follow the instructions, but the very next morning, Mr. Suresh visited the desk and told him that there were changes, and further Mr. X got eyed out of it. In which ego state the reaction of Mr. X? False. That is related to what? That is related to child ego state. That is related to the child ego state. Okay, that is related to the child ego state. Because the reaction of Mr. X was emotional. He never thought that there was wrong information that was provided by him. So that is a child ego state. That was related to child ego state. And also Mr. Suresh reacted in such a manner. He is also what? He was also possessing child ego state. And what child he was basically referring to? What child ego state he was referring to? He was referring to the little professor ego state, Mr. Suresh, if we talk about. Okay. Next it says, Mr. Chandan, officer who had joined the branch a few months ago, immediately went to Mr. X and pacify him. He regretted for Suresh's behavior and assured Mr. X that during the lunch break, the staff members will sit together and sort out this issue. In which ego state the reaction of Mr. Chandan falls? In which ego state the reaction of Mr. Chandan falls? That is related to the adult state, because he just wanted to look into the facts and figures over there. He wants to look into the logics, okay, so as to make the wrong person understand the same thing. Okay, so that is related to adult ego state. That is related to the adult ego stage. Is that clear? Kindly please do like the video and further share the video at the earliest so that we could proceed further. So there are 171 persons online, and I would like you all to kindly please do share the video and further do like the video among your friends and colleagues. Kindly do the needful at the earliest so that we could proceed. Okay, next case study is based upon the personality. It is based upon the personality. So Mr. A and Mr. B got their promotions recently in scale 2 in XYZ bank and have been posted in Delhi branch. They are working as manager operations, having two different departments of the branch. The customers and the staff are very happy with Mr. A. The staff considers him as a good guide and customers repose faith to him, share details of their financial transactions, seek his advice. He keeps himself free to talk to customers, guide the staff. His table is very clean look. His table gives a very clean look. The customer and staff normally hesitate to Mr. B. He is normal, engrossed in papers and files kept on his table. He often called his peon to help to locate particular paper or file. Many times he shows signs of nervousness. So which type of personality Mr. A is possessing? Which type of personality Mr. A is possessing? So first of all, before answering the questions over here, let me just tell you that there are two types of behaviors. One, it is a type A behavior, and the other one, it is a type B behavior. So we are having two types of personality, that is type A and type B. Type A and type B. So if we talk about the type A, first of all, type A personality persons, they are very restless. They are very restless, and further they just want to achieve each and everything in a very lesser time. So they just go for the quick achievements. And further, if we just look at the table, they are untidy. If we just look at the tables, they are untidy, and further they are having a messy appearance. And also they're very restless, they're impatient, but they are a multitasker. So type A personality persons are restless, they are very impatient, they try to do more in a very lesser time, they show nervous gestures. They show what? They show nervous gestures. Their table is untidy, and frequently they just lose their documents and blame the others for the same. And on the other hand, if we look at the personality type B, they are very easygoing. And further very much relaxed. But let me tell you that this type of personality people they are less competitive. Because they are very much relaxed. They are very much easygoing and also philosophical. And let me tell you, they are very much philosophical. They are very much less competitive. Further, they are relaxed and easygoing. Okay. And further, the concept related to the personality was given by Friedman, Mayer, and Ray Roseman. Okay. Now let's solve the question based upon it. So I just already told you that type B, if we look at the Mr. A, the staff considers him as good person. His table gives a very clean look. So person A is basically related to what type? Is basically type B person. Whereas if we look at the person B over here, he is type A personality person. He is type A personality person. Okay. And that would be related to this particular case study. Now let's move further. Next case study is based upon the working capital finance. Next case study is based upon the working capital finance. So over here we are provided the data for the different years. Over here we are provided with the data for different years 2021 and 2022. So 2021 is related to the current year, 2022 is related to the projected year. Further we are provided related data related to liabilities and the assets. Total assets and liabilities are provided with. And we are also provided with the data related to sales over here. Okay, so first question over here, it says that we need to look into the working capital for the current year. So what will be the working capital for the current year? Now what do you mean by working capital? Working capital is basically related to the funds that you require for day-to-day operations. For day-to-day operations, the funds requirement is basically the working capital. And what funds do you require for the daily basis? Those are the current assets. So if nothing is added and simply they ask for the working capital, current assets would be basically the working capital. So what are the current assets for the current year? That is for 2021. For 2021. So fixed assets, intangible assets, security deposit, investment in other firms. These are non-current assets. Also the security deposit and also the investment in other firms. These are the non-current assets. Cash in hand, raw materials, stocks in progress, finished goods, debtors. These are all the current assets. These all are the current assets. So what would be the amount of the current assets over here? So what is the amount of current assets over here in this particular case? So it is 100 plus 360 plus 90 plus 510. That is equal to 1060. So Vasudev has answered correctly over here at the earliest. That is 1060 is the amount of current assets for the current year itself. So answer is 1060. So it is 1060 in this particular case. Okay. Let's move further to the next question. It says that we need to calculate the operating cycle period for the current year and the projected year. We need to calculate the operating cycle period. Operating cycle period. Now what is operating cycle? What is operating cycle? Operating cycle period is basically cash to cash period. That likewise the firm invested the cash and they further purchased the raw material. They just did the labor work on that and further they having the finished goods over there. Then they will be selling the goods in the market. It will be the case that they will be selling the goods for the cash, or it will be the case that they will be selling the goods for the credit itself. Okay, and after that it will be realized that the particular cycle from the cash they started and further when they will be generating the cash from it, that basically related to what? That is related to the operating cycle. That is said to be what? That is the operating cycle. Okay, and how we can calculate the operating cycle? It is equal to the current assets that we are having divided by the sales. Divided by the sales multiplied by the 100. Why we divided it by the sales over here? Because that is the total amount that we will be spending and further you will be getting now. That is the total amount that we will be spending and further getting. So the common concept we can say it is equal to current assets divided by the sales multiplied by the 100, because we want to calculate the operating cycle in months over here. So what is the amount of the current assets that we calculated in the last question? It is 1060. And what is the amount of the sales given for the current year? It is given to be 2800. So it is 1060 divided by 2800 multiplied by 12 over here. So that is the operating cycle period. So it is 1060 divided by 2800 and further multiplied by 12, and that comes out to be 4.54 years. That comes out to be 4.54 years. So right answer has been posted by Kailash Kumar over here at the earliest. So 4.54 years is the right answer. And what will be the answer for the projected year? What will be the working capital cycle for the projected year? What will be the working capital cycle or operating cycle for the projected year? For the projected year, what is the amount of the current assets? It is cash in hand, it is equal to 50. Let me calculate it for you. So cash in hand is equal to 50 plus raw materials are given to be 460 plus stock in progress, it is equal to 150 plus finished goods 550. So total amount it is 1210. So current assets are 1210 divided by the sales in the next year. It is 3300 multiplied by 12. So 1210 multiplied by 12 divided by 3300, that is equal to 4.4. So working capital cycle, operating cycle for the projected year, it is 4.4, and for the current year it was 4.54. It was 4.54. Okay, so which one would be better out of these two? Which one would be better out of these two? Kindly please do let me know the answer for the projected year or for the current year itself. Which one would be better? Definitely the projected year working capital cycle is lower, so lower the working capital cycle, lower is better. Why the lower is better? Because in the current year itself we are able to generate the cash in 4.54 months, but in the case of the projected year you are able to generate the cash to cash in 4.4 months only. So that is better na. So lower is better. So lower it is, better it is. Now let's move to the next question. It says, before that, let me tell you that operating cycle is also called as cash to cash cycle, net operating cycle, or the cash conversion cycle. Next question, it says that calculate the net working capital for the projected year. We need to calculate the net working capital for the projected year. What will be the answer? We need to calculate net working capital for the projected year. Now what is net working capital? The net working capital is equal to the current assets minus the current liabilities. It is current assets minus the current liabilities. Now the current assets we have already calculated for the projected year. What it was? The term was equal to 1225 if I am not wrong. It is equal to 50 plus 460 plus 150 plus 550. That is equal to 1210. So current assets for the projected year were 1210 minus the current liabilities. So debt instruments are long. If we look at the capital over here, it is basically related to net worth. So these are related to net worth. Term loans are related to long-term liabilities. Debt instruments are also long-term liabilities. If we look at the advances, these are the short-term liabilities. That is the current liabilities. Trade creditors are also short-term liabilities. Overdraft and payables are also short-term liabilities over here. So we will be considering these four values over here. That is 50 plus for projected year. 70 plus 50, that is equal to 120, plus 650 plus 70, that is equal to 840. That is the amount of the current liabilities over here. What is net working capital? It is 1210 minus 840, that is equal to 370. So net working capital over here is equal to 370 in this particular case. Is that clear? Is that particular question clear over here? That was a quite simpler one, that you need to calculate the net working capital only. Okay, next question, let's move. There is a next case study that is based upon the profit and loss account. Kindly please do like the video, and further do share the video among your friends and colleagues at the earliest. There are 203 persons online, but only 85 likes have been there. So if you have been liking our video, if you have been learning from our video, well, kindly please do like the video at the earliest. Kindly please do like the video at the earliest so that we could proceed with the next case study itself. Otherwise, we have to stop the video over here. We need your response related to the same. If you are liking our video, only then we will be proceeding with the same. I'll be just giving you 30 seconds over here so that you can make up your mind related to that. Otherwise, we have to stop the video. So the case studies we have covered so far, that those were related to confidence interval, and further in the last video also, that is the previous video, kindly please do watch that video too, previous video that was uploaded yesterday. Over there also we covered around 13 to 14 case studies, I guess. Okay, so we'll be proceeding with the next case study over here, that is related to profit and loss account. So information relating to profit and loss account of a partnership firm ABC is given below. In the year 2019-20, the firm sold goods worth rupees 700 lakhs. So what amount of goods were sold? So the sales were amounting 700 lakhs over here. And further the gross profit is 35% of the sales. What is the gross profit amount? It is 35% of the sales. If I say that total sales are 700 lakh and 35% would be the gross profit. So gross profit over here comes out to be 245 lakhs. It comes out to be 245 lakh over here. I'm just writing L over here, that is lakhs over here. And further, its operating expenses are 28% of the sales, excluding interest payment. So operating expenses over here were 28%. What were the operating expenses? These were 28%. So if I look at the operating expenses, these were 28% of sales. Okay, so now what is 28% of sales? 700 multiplied 28%, and that comes out to be 196. And that comes out to be 196 in this particular case. And further, it is given that the firm has made an interest payment of 3.5 lakhs. And further, the tax was to be calculated at 33%. It was to be calculated at 33% over here. Okay. Now, what is the cost of sales first of all? What will be the cost of sales? So let me just tell you first of all that if we purchased a product for 100 rupees and further we sold it for 150 rupees. 150 rupees. Now what is our gross profit? Gross profit that we never considered any cost related to the marketing expenses or depreciation or any other expenses. Okay. So what will be our gross profit over here? That is 150 minus 100. That is equal to 50. And further, what is the sales amount over here? Over here we are having the sales amount is equal to 150. So what would be the answer over here? So what would be the cost of sales? That is the particular this value. So that is cost of goods sold now. So we can say. So what is COGS or COS over here? So what would be the answer over here? So we are provided with the. So let me just tell you that cost of sales is equal to the sales minus gross profit. Now we are having the sales equal to what? Sales amount we just are given in the question, that is 700 lakhs. Minus the gross profit we calculated, it is 245. So what is the cost of sales? It is 700 minus 245, that is equal to 455. That is equal to 455. Is that clear? So that is basically related to what? That is the cost of sales over here. Just let me write it over here. That is 455. Okay, that we just calculated. So right answer has been posted by Kailash Khomane at the earliest. Now let's move to the question number 2, which says what is the operating profit of the firm? We need to calculate the operating profit of the firm. What is the operating profit of the firm in this particular case? We need to calculate the operating profit over here. What is operating profit? Operating profit is equal to, it is equal to the gross profit and subtracting the operating expenses. Subtracting the operating expenses. So gross profit is basically what? Gross profit we already calculated 245. And what are the operating expenses we calculated? It is 196. It is 196. So what would be the amount we will be having over here? So what is the operating profit? It is 245 minus 196, that is equal to 49. That is equal to 49 in this particular case. Is that clear? That is 49 lakh in this particular case. That is a operating profit. That is the operating profit. Okay. I'm just writing it over here. That operating profit we just calculated to be 49. Further, let's move to the next question. It says we need to calculate what is the profit before interest and tax. In the next question, we need to calculate the profit before interest and tax. What is PBIT? Profit before interest and tax. How do we calculate PBIT? It is operating profit you are having any minus the indirect expense. If there is any indirect expenses, that is to be subtracted. Those are to be subtracted. So PBIT is basically what? PBIT is operating profit plus any non-operating income, non-operating surplus, plus any non-operating surplus. That is to be added up. Not indirect expenses, it is operating profit plus any non-operating surplus. And for the operating profit we calculated to be 49, and there are no non-operating surplus which are provided. Non-operating surplus means not from the mainstream business, not from the mainstream business. So it is 0 over here. So it is equal to 49 again. So PBIT is again what? PBIT is 49 again. PBIT is 49. Okay. So question number 3 also the same answer would be there, that is 49. Okay. Now let's move to the next question. What is the profit after interest and tax? What will be the profit after interest and tax? If we need to calculate the profit after interest and tax, so on which component the tax is to be deducted, and what will be the profit after interest and tax? So first of all, we need to deduct the tax. Then only we can do a certain that what will be the profit after tax. We need to calculate the profit after tax. Okay. So that will be equal to what? That will be 49 minus interest component minus tax component. So first of all, we will be subtracting the interest component, that is 49 minus 3.5 lakhs, because that is our interest component. So that comes out to be 45.5 and minus 33%, because that is a tax that is to be deducted, minus 33%, and that comes out to be 30.485. 30.485. That will be the answer. That will be the answer in this particular case. You must be keeping one thing in mind. We must be subtracting the interest first of all, because that will not be taxable. Only the component that is left after subtracting the interest component, that will be taxable. That is 30.485 would be the right answer in this particular case. Is that clear? And that would be related to this particular case study. Let's move further. Next case study is based upon the credit management. Next case study is based upon the credit management. Now, what do you mean by credit management? What do you mean by the credit management over here? So, as per the Basel Committee recommendations, the risk weight for retail lending is 75%, but it must be fulfilling the four criterion, that is the orientation criterion, product criterion, and granularity criterion, and further related to the low value of the exposure. Low value of the exposure over here. So what it is basically related with? So first of all, we will be talking about the orientation criterion. First of all, we will be learning related to the orientation criterion. So what it is actually related to orientation criterion? So whether it is a fund-based exposure, whether it is a fund-based exposure, or it is non-fund based exposure, or it is non-fund based exposure to any of the legal entities, that will be basically accounted for orientation criteria. Legal entities, whether those are individuals, let me write over here, whether those are individuals or the small businesses, they will be accounted for what? They will be accounted for the retail component itself. And when you are dealing with the small businesses, in case we are dealing with the small businesses, in that case, the turnover should be lesser than that of the 50 crores. It must be lesser than that of the 50 crores over here. And related to the existing entities, in the case of the small businesses over here, what do you mean by the turnover? That is related to, it is basically related to average turnover. Not only turnover, it is related to average turnover. And that is average of last 3 years. That is average of last 3 years. And that must be lesser than 50 crores when we are lending to the small businesses. And further, it could be also related to the individuals and the persons. It should not be individual. I must be writing persons over there. So each and every legal person, whether it is natural legal person or otherwise legal person, that is basically the loan is advanced to. It means the case related to LLP or HUF or partnership firm, those are also accounted for under the person itself. Is that clear? Is that particular part clear over here? Okay, so that is what, that is a orientation criterion. And further, it is related to what? It is related to the product criterion. Next, it is related to the product criterion. So under the product criterion, we are basically sanctioning the facilities, either it could be in the form of the term loans, it could be cases of the overdraft facility or a CC loan, it could be education loan, it could be a housing loan which can be sanctioned. So this is related to different type of facilities which can be sanctioned. This is related to the different type of the limits which can be sanctioned over there. Is that clear? So the orientation criterion was related to the legal entities and the small businesses to the loan is extended to, and the product criterion is related to that what type of the product has been basically the loan been extended for. The loan been extended for. That is related to, it could be revolving credit, it could be a term loan, it could be a CC limit, it could be fund based exposure or a non-fund based exposure. When I say fund based exposure, what do you mean by it? In case of fund based exposure, there is direct outlay of the funds. There is direct outlay of the funds. Okay. But in case of non-fund based exposure, there is no direct outlay. Likewise, if a bank guarantee is extended, there is no direct outlay. There is no direct outlay. But when the contingent liability is there, when the liability crystallizes, in that case there is outlay of the funds. Let us say the case that the A was to pay the amount to the B, and there was a bank guarantee which was extended by the bank over here. Now the bank will be having the obligation so as to pay the amount only and only if the A defaulted in payment. In only that case, the XYZ bank is to make the loss good to the person B over here. Is that clear? Okay. Now the third criterion, it is related to the granularity criterion. The third criterion that we are going to learn about over here, that is the granularity criterion. Now, why do just the banks just shifted from the corporate sector? Why did the banks just shifted from the corporate sector lending to the retail segment lending? In the case of the retail banking, let us say the case that the bank is having 100 crore of the funds over here, which are lendable funds which are available. The bank can basically sanction 100 crore of the loan to one firm in case of corporate lending. Whereas in case of the retail banking, 100 crore of the funds can be lent to thousands of the entity in case of retail banking. So in which one is more riskier? Which one is more riskier and which one is lesser riskier? Definitely, when we are lending to one firm, single person only, 100 crore over there is a large exposure, that is quite riskier. Whereas in the case when we are lending to a number of persons over there, number of individuals over there, that is quite less riskier because the risk is diversified. It is said to be what? It is said to be diversification of risk. It is said to be the diversification of risk. There is a risk is diversified now. Risk is not related to single entity. It is basically diverged over the multiple entities over there. That is basically it related with. Okay. So that is related to granularity concept. And as per the granularity concept, so as to maintain the risk weightage percentage of 75%. In case of retail portfolio, whatsoever the retail portfolio you are having, whatsoever the total amount of the retail portfolio we are having, the maximum exposure to an individual, the maximum exposure to a small business or individual, it should not be greater than 0.2% of the total portfolio, retail portfolio. It should not be greater than 0.2% of the total retail portfolio. What does it indicate? Let us take the case that the bank XYZ is having the total retail portfolio of amounting 1,000 crores. So as to maintain the granularity criterion, the advances to single individual, it should not be exposure to single individual, whether it is fund based or non-fund based. It should not be greater than 0.2% of the total portfolio over here. So 1000 into 0.2%, that is equal to 2 crores. The exposure must not be greater than 2 crores in this particular case. Okay, is that clear? That is related to what? That is related to granularity criterion. And let me tell you one thing, whensoever the granularity criterion must be applied for, the NPAs, the retail NPAs are to be subtracted. Is that clear? Is that particular part clear over here? So if I say that the 1,000 crore is a total portfolio, and out of 1,000 crores, we are having NPA amount equal to 200 crore. In that case, our net retail portfolio will be 800 crore, and what is the maximum exposure that can be made to individual? That is 800 into 0.8%. That is 1.6 crores. Is that clear? that is related to the granularity criterion. Okay, let's move further. That fourth one, it is related to low value of additional exposure. It is related to the low value. The fourth one, it is related to low value of the additional exposure. Low value of additional exposure. So what does it indicate? It indicates that the maximum loan which can be sanctioned under the retail portfolio, that is basically limited to 5 crores. That is basically limited to 5 crores. Okay. So as for the individual exposure. It is limited to 5 crores. Just let me mention it over here. For the individual exposure over here, it is limited to 5 crores. Okay. So that is related to these 4 criterions. The first one, orientation criterion, and the second one, the product criterion, granularity criterion, and the low value of additional exposure. Now let us have a look at the questions over here. So according to the orientation criterion, the loan can be given to small business for this purpose means the total turnover. So the total turnover should be lesser than 50 crores. It should be lesser than 50 crores for the small businesses, and that is related to what? That is related to the total average turnover. That is related to total average turnover for the last 3 years. And in case of the new entities, it is basically related to what? It is basically related to the current year only. Is that clear? And for the new entities, it is related to what? It is related to projected turnover only. For the new entities, we must look for the projected turnover only. Okay. Next question, it says, as per the low value exposure criterion, to classify the loan under the retail banking, the amount of medium exposure to a single borrower can be. So amount of exposure to a single borrower can be up to what amount? It can be up to 5 crores. Okay, as per the low value exposure criterion, it can be up to 5 crores. So if I say as per the granularity criterion, of the 0.2% of the retail banking portfolio, loan is to be sanctioned, and that is basically 10 crores. And for the person A, who is an individual, applied for a loan of rupees 7 crore. Can we do sanction the same to the individual? So as to maintain the risk weightage percentage of 75%? No, that cannot be sanctioned. That cannot be sanctioned in that particular manner. Okay, because as per the low value of additional exposure, the maximum amount that can be sanctioned, it is basically 5 crores, so as to maintain the risk weightage of 75%. Let's move further. It says, according to the product criterion, the loan given under the retail banking can be in the form of, loan can be in the form of the revolving credit, line of credit, it can be term loan, leases, it can be student loan, education loan, it can be small business facilities. So all these are covered over there. Next it says, according to granularity criterion, the aggregate exposure of one counterparty should not be more than 0.2% of the overall portfolio. It should not be more than 0.2% of the overall portfolio. Question number 4 over here. Okay. Next case study, it is based upon the financial ratios. So ABC company sells hardware for machinery. During current year, it reported cost of goods sold on its income statement rupees 7 lakh. Beginning inventory was 25 lakh rupees. Closing stock is given to be 32 lakh rupees, and we need to calculate the turnover ratio. We need to calculate what? We need to calculate the turnover ratio. Now turnover ratio basically signifies what? It signifies that in a given time period, how many times the stock was replaced. So it would be stock turnover ratio over here. First of all, it would be stock turnover ratio we are basically concerned about. So whenever we talk about the stock turnover ratio, it basically related to what? That how many times our stocks were replaced. So more the stock turnover ratio, better it is. More the stock turnover ratio, better it is. What is the formula related to stock turnover ratio? It is cost of goods sold divided by the average inventory. And what is the formula for average inventory? It is the opening stock or the beginning stock plus the closing stock divided by 2. Divided by 2. That will be the answer. So what is opening stock over here? Opening beginning stock is 25 lakh plus closing stock is 32 lakh divided by 2, that is equal to what? That is equal to 57 divided by 2, that is equal to 28.5. That is equal to 28.5. And what will be the COGS value over here? It is already given, that is 7 lakh. 7 lakh divided by 28.5. 7 lakh divided by 28.5. And that comes out to be 7 divided by 28.5. That is equal to 0.2456. 0.2456. Okay. So for the first question, the stock turnover ratio that we calculated, it comes out to be 0.2456. Is that clear? Okay. Now let's move to the next question. It says, Kailash Limited sells agricultural tools. During current year, it reported cost of goods sold in the income statement rupees 17 lakh, beginning inventory 15 lakh and closing stock 13 lakh. What would be the answer? What is the average inventory? What is average inventory? It is 13 plus 15 divided by 2, that is equal to 28 divided by 2, that is 14. And for the stock turnover ratio, it will be equal to COGS, that is 15, that is 17 lakh divided by 14. 17 divided by 14. So what will be the answer? 17 divided by 14, that is equal to 1.2142. 1.2142. That's quite impressive. That's quite impressive and further better than that of the previous one. Okay, you must be able to compare these also. You must be able to compare these also. So that would be related to the question number 2 over here. Next, it is related to the net income available to the stockholders is 180. So the net income which is available to the stockholders, it is 180. Total assets are given to be 1300. Total assets are given to be 1300. The return on the total assets would be. So now what do you mean by a return? So if I invested the total assets, if I just invested rupees 100 and further I'm getting a return of rupees 20 over there. So what would be a return? What would be my return percentage? It would be 20 divided by 100 divided by 100 into 100 just to get in percentage. That is 20%. As simple as that. And also in this question, I'm asked the same. That is, I need to calculate the return on total asset. That is a return on investment. That is it, return on the total assets over here. That what is the total assets return you are getting? That how optimally we are utilizing our assets so as to generate the return. That is basically main purpose of this particular ratio. So what will be the answer? It will be the total. It will be the net income which is received. It is the net income which is received divided by the total assets multiplied by the 100. Okay, so net income it is 180 and the total assets these are 1300 and further multiplied by 100 and that is the percentage. That would be the percentage. So 180 divided by 1300 multiplied by 100, that is equal to 13.846. 13.846%. Okay, that would be answer related to this particular question. So before moving to the next question over here, kindly please do like the video at the earliest and further please do share the link among your friends and colleagues under the different groups, WhatsApp groups, Telegram groups. And if you want to join on our WhatsApp group, you need to WhatsApp us writing your name and mention CAIIB along with it and WhatsApp it to the number 83609 44207. Okay, so just do WhatsApp us and further you can enroll into the courses visiting the website iibf.info where you will be getting the full course videos, chapter wise previous year questions, mock test and further the case study videos are also available over there so as for the sure success in the CAIIB itself. So do enroll right now and further start preparing from tomorrow itself related to BFM also. Okay, kindly please do take this opportunity seriously because it may be the case that from the next attempt onward there will be 5 subjects that you are to clear. Okay, so let us solve this particular case study that is based upon the working capital. Over here we are provided with the data related to cash, credit, trade creditors, other current liabilities, total current liabilities, etc. and we need to solve the questions accordingly. So first of all, we need to calculate the current ratio. Now what is the formula of current ratio? It's quite easier so as to calculate the current ratio. that is the current assets divided by the current liabilities. What is the amount of the current assets? It is cash, inventory, debtors. All these are basically, these are the total current assets which are given to be 8600. So simply it will be 8600 divided by the total current liabilities, that is 5600. So 8600 divided by 5600, that comes out to be 1.5357. 1.5357. So that would be the answer related to this particular question. That would be the answer related to this particular question. Next question, it says calculate the quick ratio. We need to calculate the quick ratio. This is the third time we are going to calculate the quick ratio over here. So this is quick assets divided by the current liabilities. So what would be the quick assets? We will not be considering the inventory component. Otherwise, we will be considering we will not be considering the other components. So it will be 4600, 8600 minus 4000, 4600 divided by 5600. So it will be the quick ratio over here, that is 4600 divided by 5600, that is equal to 0.821. 0.821. That will be the answer. That will be the answer related to the, that will be the answer related to the quick ratio. Okay, let's move further. In next question, we need to calculate the net working capital. And net working capital, I just told you, current assets minus current liabilities, that is a net working capital. As simple as that. Very easier case study. 8600 minus 5600, that is equal to 3000 over there. That is the net working capital. That is the amount that was available for the working capital cycle itself. That is a net working capital. Next it says we need to calculate the working capital gap. What is WCG? So WCG is the amount that is to be financed actually. Working capital gap. WCG is the amount that is to be financed. So it is basically current assets minus the current liabilities other than the minus the other current liabilities over there. So what is actually the WCG? That is a working capital gap. That is the part that is to be financed by the banks. This is the part which is to be financed by the banks. That is a working capital gap. So what will be the amount related to working capital gap over here? Can we do answer at the earliest? So it is total assets, total current assets minus the current liabilities. It is the current assets minus the current liabilities other than the bank borrowings. Current assets minus current liabilities other than bank borrowing. So what are the current assets? These are 8600 minus 5600, but we will be subtracting the bank borrowings. That is 900 from here. That is 900 from here. These are to be subtracted. Okay, so 8600 minus 5600 minus 900. Sorry, 8600 minus 5600 plus 900. That is equal to 3900. That is equal to 3900. So what will be the WCG? It is a 3900 in this particular case. Okay, I'm just writing it over here for the reference purposes. That is a WCG we calculated to be 3900 in this particular case. Next question, we need to calculate the MPBF as per the Tendon committee method 1. We need to calculate the MPBF, that is maximum permissible bank finance. What do you mean by MPBF? This is maximum permissible bank finance. Okay, so Tendon committee actually provided 3 methods, 1, 2 and 3. The third method was not accepted by the Reserve Bank of India, and further these are the 2 methods that we are going to cover. So first it is related to MPBF method 1. So as per the maximum, you need to calculate the maximum permissible bank finance as per the method 1 over there. So in case of Tendon committee method, the margin is to be maintained from the WCG itself. So what is the amount that is to be financed by banks? It is a working capital gap that is to be financed. It is a working capital gap that is to be financed. Why working capital gap? So first of all, let me just give you a conceptual clarity that net working capital is a capital that is available for working right now. That is a capital that is available with the firm right now. Okay. And further, related to working capital gap, that is the amount that basically for which the firm must be visiting the bank. Okay. If I consider that the amount over here, that is a working capital gap over here. If I say I am having the current assets equal to, as per this question itself, it is 8600, And further, if I consider that I'm having the current liabilities equal to 6,000 other than the bank borrowings, so what will be the working capital gap? It will be 2,600. It will be 2,600 for that particular case. Okay, so that is the case that is to be financed. So working capital gap is to be financed. You must be keeping one thing in mind. So as per the method one, the maximum amount which can be sanctioned, it is basically working capital gap, and for the margin is to be maintained at 25% of WCG. In the method one, 25% of the WCG working capital gap is to be maintained as a margin. Okay, so what will be the lending? It is 75% of the WCG, or we can simply say WCG we calculate it to be 3,900 minus 25%. That will be the answer. So what is the amount which can be sanctioned maximally under the method one? It is 2,925. So as per the MPBF 1, the maximum amount which can be sanctioned, it is 2,925. Is that clear? Okay. Now let's move to the next question over here. It says calculate MPBF as per the Tendon Committee method 2. So as per the Tendon Committee method 2, the maximum amount which can be sanctioned, it is WCG working capital gap minus 25% margin of the total current assets. 25% margin of the total current assets. So WCG we calculated to be 3,900 minus 25% of 8,600. That is the total margin that is to be contributed by the borrower. So it is 8,600 into 25% minus 3,900. It is 8,600 into 25% minus 3,900. That is 1,750. So maximum permissible bank finance as per the method 2, it is 1,750. Okay. And from where the margin is to be contributed? The margin will be contributed either from the long-term sources, that is the long-term liabilities like capital or other long-term liabilities. Okay. And or from the contribution by the borrower itself, Okay. Is that clear? Next question over here, it says that calculate the current ratio as per the Tendon Committee method 1. What will be the current ratio as per the Tendon Committee method 1? So if we consider that the cash credit component is not 900 and it is sanctioned to be 2,925. As per the method 1, the maximum permissible bank finance which can be sanctioned was 2,925 now. So if we consider cash credit component is 2,925, so what will be the new total current liabilities? It will be 5,600 minus 900 plus 2,925, that is equal to 7,625. So the new current liabilities will be 7,625. And what will be the new current ratio as per the method 1? It will be equal to 8,600 current assets minus divided by current liabilities, that is 7,625. So it is 8,600 divided by 8,600 divided by 7,625, that is equal to 1.127. That will be equal to 1.127. So the current ratio as per the method 1, it would be equal to what? It will be equal to 1.127. Okay, and what would be the current ratio as per the method 2? So as per the method 2, the finance which will be sanctioned, it will be 1,750. And what will be the amount of the new current liabilities? It will be equal to 5,600 minus 900 plus 1,750. That is the new current liabilities are equal to 6,450. So as per the method 2, the current ratio would be equal to 8,600 divided by 6,450. 8,600 divided by 6,450, that is equal to 1.33. So as per the method 2, the current ratio would be equal to 1.33 into 1. Is that clear? Is that particular part clear over here? Because you must be understanding the part over here. So let me tell you again that under the method 1, the margin is to be maintained in the 25% of the WCG, whereas at the method 2, the margin is to be maintained as per 25% of the total current assets. Let's look at the next question over here. It says calculate how much amount is short in borrowing in cash credit as per Tendon Committee method 1. So right now we are sanctioned 900 of the CC. That is a current CC. And as per the method 1, the CC part would be 2,925. It will be 2925 minus 900. So the shortfall is 2025. So the shortfall as per the method 1 it is 2025, and as per the method 2 the shortfall is what? It is 1750 minus 900, that is equal to 850. That is 850 over here. Is that clear? That would be related to this particular case study. Okay, next case study is based upon the Johari window. Next case study is based upon the Johari window. Now what is Johari window? Now this was the concept which was given by the Joseph Lutz and Harry Ingham. It was given by Joseph Lutz and Harry Ingham. That is why it was named from the alphabets from the Joseph, that is Joe, and Harry Ingham, that is HRI. So that is why it is said to be Johari window. It is said to be Johari window. Okay. So now let us learn about the Johari window. So there are 4 arenas that must be known. Over there. First of all, related to this particular factor, that is open area, that is known to self, that is known to others. So if the things, the attitude, behavior, the skills over there, okay, so which are known to me and also to others. When I say known to me, that means what? That is that I know particularly about me, and that is also known to others. That if I teach JAIIB, CAIIB, I know that, you know that, that is open area. That is open area. And for the area which is known to self but known to others, it is said to be hidden area. It is said to be hidden area. Now, if I know something about me that is private to me, that is basically known to me only but not to you, that is a hidden area. And for the third one, it is related to not known to self but known to others. Not known to self but known to others. What does it indicate? That is the area that you know about me but I do not know about myself. That is a hidden area. That is a blind spot. Not the hidden area, that is a blind spot that I don't know about me. Okay, but the others know about it. And for the unknown area or the dark blind, that is basically related to what? That is related to not known to self, not known to others. That is, I do not know about myself, you do not know about me. That is a unknown area. That is an unknown area. And under the teamwork over there, our maximum focus is there so as to widen up the open area. Now, why to widen up the open area? Let us take the case that we are having a team, and further we are having 6 members, and further a new member joined over here, In that particular case, we know very little much about the new joinee. Okay, so it is very much necessary so as to widen up the open area. So we must be focusing on the open area itself, because more we knew about each other, more we will be communicate, and more healthier the communication would be, and more better it would be for the firm itself. Okay, so that is the case. So now let's solve the question. It says, what is known by the person about him, herself, and is known about others? It is the open area, also should be open self, free area, free self, or the arena itself. Okay, what is known by the person about him or herself, but which others know, what is unknown to ourselves, which we do not know about ourselves, but others know about it. That is basically related to it. That is basically the blind spot or the blind area, blind self itself. Okay, and what the person knows about himself or herself and others do not know about it, that is basically the hidden area, hidden self, avoided area, avoided self, or facet. Okay, and further it is related to what is known by the person about himself or herself. They do not know about themselves or herself, and also the others do not know about it. That is basically the unknown area or the unknown self. So in Johari window, the window dark arena represents which of the following? The dark arena represents which of the following? And please do answer it at the earliest. Which option would be the right answer? It is related to dark arena represents which of the following? So there are 4 arenas you know about. So which area it would be? Known to others and not known to self. Is it so? The area which is not known to ourselves, but others know about it. That is a hidden area, na? That is actually the hidden area. That is the dark area over there. That is the area actually. That is a hidden area over there. Okay. Next it says, in Johari window, the window dark blind represents which of the following? The dark blind represents which of the following? So dark blind is basically related to what? Dark blind is related to we do not know about ourselves. others do not know about that self. That is basically related to what? That is related to the dark blind itself. Okay. Option B over here would be the right answer. Let's move further. There are few dimensions of the concept of self-awareness as per the Johari window concept, which include how much of one's behavior is known to him, how much he feels he knows about others, how much he feels others know about him. Which would be the right answer? Which would be the right answer? So there should be no confusion. Let me explain to you this again. So we just covered 4 areas. First of all, the area which is known to ourselves and to others, that is the arena or the open area. The area which is not known to ourselves but to the others, that is a blind spot which we cannot see but the others can. Just try to remember in such a manner which we cannot see but the others can. That is a blind spot or the dark blind self itself. Okay, and for the which not known to others, which is not known to others but known to self, that is a private. That is a private area, that is a hidden area. Okay, and which we do not know about it and which others don't know about it, that is an unknown area. That is the unknown area. Is that clear? Is that clear? So over here in the question 1, it was related to dark arena. It was related to dark arena. That was basically related to what? That is not known to basically what? Can you do answer? What would be related to it? It was which is known to others but known to self. Which was basically known to self and not to others. Okay, so let's move to the next question over here. We were solving the question number 3, and all these three dimensions are related to what? All these three dimensions are related to what? All these three dimensions are related to the Johari window itself. Option C over here, question number 3 would be the right answer. Option C over here, question number 3 would be the right answer. Now let's move to the, sorry, not option C, it will be option D. Not 1, I actually misread it. It is not option C, it is option D over here. That is 1, 2, 3. It is 1, 2, 3. Option D over here is the right answer, not option C. Okay. Let's move to the next question. It says that is a case study based upon the compensation and reward. It is a compensation and reward over here. So the compensation is a amount which is basically, it can be financial amount or it can be non-financial amount which is paid to the employee so as to retain them, so as to entertain them, so as to be basically being competing and be performing in the organization itself. So case study over here, it says that bank ABC is a private bank established 30 years ago. The bank did perform well till recently, but for the last 2 to 3 years, the performance of the bank when compared with the peer group, that when compared it with the other similar banks over there, it was found not up to mark. Per employee business and the per employee profit is just 60 to 65% of the prevailing in the peer bank groups. So if we say that a bank in the leading peer group, that our competitors are earning having a 100 lakhs business per employee, our bank is having 60 to 65 lakh business only per employee. That is the case over there. And further, the bank engaged a consultant to study the phenomena and suggest strategies to get bank out of the current situation. So after studying various aspects, the consultant recommended that the employees be offered performance based remuneration so that the employees who are able to perform according to benchmarks to be fixed by the bank itself would get extra amount, extra remuneration, and those who perform below the benchmarks have to face a cut in the remuneration itself. Okay, so the bank accordingly fixed various benchmarks and implemented the action plan by modifying the recommendation suitably. Initially, there was a lot of resistance by the staff, but over a time period was found that the performance of the bank started showing improvement over there. So we need to solve the questions based upon that. But before that, just let me tell you that the rewards can be, it can be a financial reward or it can be a non-financial reward. or it can be a non-financial reward. And further, it is related to that these rewards are over there so as to retain the employees and further so as to keep them performing. So let's solve the questions based upon that. So question number 1 overhead says that in Indian public sector banks, in general, what is not correct regarding the remuneration? What is not correct regarding the remuneration in Indian sector bank, public sector banks over there? So as of general scenario, what is not correct? Actually, in Indian banks itself, the employees get fixed remuneration. They get fixed remuneration. So whether you are performing or not performing, you'll be getting the fixed remuneration. So if I take that there are 3 employees, let us take the case that there are 3 employees, and one it is performer and the others are not performing. C is mediocre, A is not performing, B is performing. Okay, so in that case, 3 of these will be getting the same remuneration. So that is the main issue with the Indian public sector banks. Okay, and further, let's move further. It says, what are important elements on basis of which the compensation is decided? What are the different elements, important elements based upon which the compensation is decided? So it is decided based upon the 3 elements. One, it is the objectives of the firm. Itself. So if you basically want to if you want to achieve the best in the industry itself, you have to employ the best employees too. So if I talk about the Apple, or if I talk about the Google or Amazon, they're basically employing best of the employees with them. They're employing best of the employees, and also they are paying them very high pay scales. Okay, so that is the main one of the factors. The other one is related to the market situation. Now what do you mean by market situation? It is related to that talent is very scarce. The technical talent is very scarce. If you want to basically write a code, let us take the case that you want to develop an application, and further you are going to write it for the Android devices. So in that particular case, you need an Android developer. You basically need to employ an Android developer, and for that particular skill, you must be paying him a higher pay scale. Okay, so that is related to the market situation itself. And the third one, it is related to the internal or external factors. So internal factor, you can basically understand, if I'll be having the capacity to pay. So if definitely I want to hire the best of the employees, but I must be having the capacity to pay. That is basically internal factor to me. Okay, so that is internal factor. And further, if there is a law that minimum this amount is to be paid, that minimum these wages are to be paid, in that particular case, that would be basically also a factor that will be deciding the compensation. So these are the 3 factors, that is objectives of the firm, and for the market situation, and the internal and external factors. Next one, it is related to what are the disadvantages of fixed remuneration. What are the disadvantages of fixed remuneration? First disadvantage, it is related to that the performance is degraded. Definitely, because even the performer is getting the same amount and non-performer is getting the same amount. So in that case, performance is degraded because no one tries to be competitive. Second, it is related to there is low motivation. Why? Because they know that they will be getting the same amount at the end of the month. Third one, it is related to even the high performing employees, which can do perform well, they also become mediocre. Okay, so these are the disadvantages of fixed remuneration. Okay, now next one, it is related to the case study on job analysis. It is based upon the job analysis itself, but before that we must be learning about the different important aspects related to the role over there. So first of all, it is related to role stagnation. This topic is quite important, and let me tell you that last time there were a lot of questions which were asked from the module C itself. So over here, it is related to the, first of all, it is related to the role stagnation. So when a person is promoted, he basically assumes a new role about it. Okay, so let us take the case that there is a person who was in clerical cadre, who was a clerk, and now he is promoted to officer scale 1. He's being promoted to officer scale 1. He basically has taken the promotion. He just assumed something about the new role, but he's not able to perform that. He's not able to perform that. He was performing well being a clerk, but he's not able to perform well being a officer over there. That is basically related to what? That is related to the role stagnation. That is related to the role stagnation over there. Okay. Second one, it is related to inter-role distance. Inter-role distance. So being an individual, you basically do occupy the different roles, more than one roles. At home, you are a husband, you are a father, you are a son. At office, you are an officer. You are to basically fulfill responsibilities over there. And sometimes it feel like that due to one, so as to honor one of the obligations, I'm not able to honor the others. I'm not able to honor the others. Likewise, you were to visit a function over there, but due to the heavy load of the work, you were not able to visit the function. So in that case, you will be basically thinking like that. And that is due to what? That is basically the inter-role distance. That is the inter-role distance. Third one, it is a role set conflicts. Third one, it is the role set conflicts, that different people have different expectations from one role. So if we are having one role over here, and further the different people concerned are having the different expectation from the role itself, that is basically what? That is the role set conflicts. There is possibility of incompatibility amongst the expectations of the others from the employee end. It may result into the role ambiguity, role expectation conflict, role overload, etc. So those are the different other role functions that we'll be learning. But role set conflict is related to what? Because the related persons, they do expect different things from you, from your role itself. That is why there is a role set conflict. Next, it is a role ambiguity. Now, what is role ambiguity? It is related to the individual who is performing the job. So let us say the case that the person A joined as an officer, but is not clear about his role. He is not clear about his job. That is basically what? That is a role ambiguity. That is a role ambiguity. And for the role expectation conflict, a role expectation conflict. So when there is a conflicting expectation or demand from a role, the role occupant experiences a conflict and stress. It is somewhat related to what? It is somewhat related to the role set conflict. It is somewhat related to role set conflicts where the different expectations are over there and there is a conflict between that. But in that particular case, role set conflict, it was related to the different persons. But in case of role expectation conflict, it is related to there are expectations from the boss, and you are thinking like that I'm not able to do that, and further that will cause what? That will cause the role stress itself. Next, it is role overload. When the multiple tasks are to be performed, and further you think like that many other tasks are to be performed and those cannot be done, that is basically the role overload, and it also causes a role stress. Then it is a role erosion. So we can do understand role erosion by way of an example. Let us take the case that previously there was a regional rural bank, and there was a post related to one GM only. There was previously a post related to one GM only, general manager, and he alone was performing all the duties. Okay. Now there was new occupancy that was created for the GM. Now there are two GMs over there, and now the duties are segregated among two. So in this case, the person who was appointed before, he will be feeling that his authority is eroded, his role is eroded. That is basically related to what? That is related to the role erosion. Then further, it is a resource inadequacy, because definitely when you are to perform, you do require different resources so as to get the best out of you. Okay, and further, if those resources are not adequate, basically not adequate, are inadequate, in that case the role occupant may experience the resource inadequacy. Then it is a personal inadequacy. You do require some skills so as to perform the job, and when you will be basically not exhibiting those skills, that is basically related to the personal inadequacy, and you will not be able to perform the role effectively. Then it is related to role isolation. So let me give an example. There were two clerks in the branch over there, person A and person B, and person A was doing quite well. It was doing quite well in the accounts, and person B was doing quite well in being a cashier. He was doing quite well in being a cashier, and further, now the roles were switched. Now it may be the case that the person who was doing well in the accounts, he may not be able to do well being a cashier over there. That was related to what? That was related to isolated, because you were affirmed with one of the role, but you are not basically having the strong linkage with the other role. That is basically the role isolation. That is basically due to the role isolation. Now based upon that, we'll be solving a case study over here. So Mr. A senior clerk, did not accept a promotion as officer for longer period, although after joining the bank some 25 years ago. So he took keen interest in improving his professional qualification by completing associate examination of Institute of Banking and further finance for a master's degree in economics. Okay, so looking into the benefits of the promotion as officer, particularly relating to the pension after retirement. After retirement, he basically did what? He basically get promoted to the officer sector over there, and further he also take the promotion, so because that will help him to get good matches for his children at the time of their marriage. He accepted the promotion and was promoted about 300 kilometers away from the existing place of posting, where he was living with his family for a long time. So here is a story. So person X or Mr. A over here, let us say the Mr. A, who was a clerk and he has been working in the bank for the last 25 years, never took the promotion, but now he took the promotion looking at the financial benefits, and further he took that, he just kept in mind that it will be better for his children and all the things, and further now he just took the promotion. Now he's placed 300 kilometers away from the place of his residence where he was previously residing with his family. So although it was all exciting for him initially, but after a few days he started feeling that by accepting the promotion he made a mistake, as he was not able to perform the activities related to the job itself as an officer properly due to lack of knowledge and confidence. So he felt that he did not have the knowledge, he did not have possess the confidence with him, so as to perform the duties, and he basically feels very depressed about it. He also felt that he was unable to give time to his family now, because previously he was living with his family, but now he's away 300 kilometers away, which he was able to give earlier before this promotion. Then he tried to get adjusted to the new situation, and his senior at the new branch also assured him for the support, but ultimately he decided to seek for reversion and go back to the previous post over there. Mr. A has not been able to perform the activities relating to his job properly and decides to see reversion to the previous position over there. Okay. Now the question over here, it says Mr. A started feeling that by accepting the promotion he made a mistake and he was not able to perform the activities relating to the job over there properly due to the lack of knowledge and confidence. This is called what role? This is basically due to what? This is due to the role stagnation. This is due to the role stagnation. So Salja has answered correctly at the earliest. Question number 1 over here, it is a role stagnation. Role ambiguity is related to when you're not clear about your duties. So it will not be the role ambiguity, it is the role stagnation. Next, it is related to Mr. A feels that he is unable to give time to his family, which he was able to give earlier before this promotion. This situation falls under which situation? This situation falls under which situation? It is inter-role distance. It is basically due to what? It is due to the inter-role distance. So basically it is due to inter-role distances now, because there is a role distance between it. Because there is a role distance between it. Okay, so question number 2, inter-role distance would be the right answer. Now let's move to the next question. It says related to personality. So related to type A and type B personality, we have learnt about earlier also. So we'll be simply solving the case study. Okay. So one dimension of personality which gets attention from the organizations and medical researchers is the type A and type B behavior profiles. A person exhibiting type A behavior is generally restless and multitasker, impatient with a desire for quick achievement, impatient with a desire, perfectionism, all of the above. So which one would be the right answer in this particular question? If we talk about the type A and type B, I just told you that type A person are restless, they are impatient, they are multitasker, they just give the nervous gestures. Okay, they keep their desk untidy, they seldomly lose their items and further blame the others for the same. Option D over here is the right answer. So option D over here is the right answer. Next question says, a senior clerk in the bank has promoted as officer. So we have already covered this question. Role stagnation is the right answer. Next question, it says, when a person finds that certain functions which he would like to perform are being done by some other person having a different role. It is called what? Role expectation conflict, role overload, role erosion, or role isolation. Which one would be the right answer? Question number 3, which one would be the right answer? It is option C. So Shiv Vishnu has answered correctly at the earliest. That is role erosion. A role erosion. Okay, that is the right answer over here. Next question says, a bank manager is methodical in daily work. He has full control and never complains about lack of time even when he is under pressure. He plans his activities well. He is exhibiting what behavior? Type A behavior or type B behavior? A mix of type A, type B, or neither type A and type B. So which one would be the right answer? Which one would be the right answer? He is exhibiting type B behavior because type B persons are easygoing, they are relaxed, they are less competitive, philosophical, and further they prioritize their jobs. Option B over here would be the right answer. Question number 4, option B would be the right answer. So Shiv Vishnu has again answered correctly over here. Next question says, an officer has been promoted as manager, but now he is not finding much time to attend his wife and children, who placed time demands on him. This is a situation of role set conflict, role ambiguity, role stagnation, or inter-role conflict. It is due to the inter-role conflict. So option D over here. So A, B, C, D has answered correctly over here. So inter-role conflict over here is the right answer. So next it is related to, as per Abraham Maslow's motivation theory, the people have how many needs? People have how many needs? Last question for today video itself. So as per the Abraham Maslow motivation theory, how many needs are there? There are 5 needs as per the Abraham Maslow needs. Okay. So that would be all related to this particular video. I hope that you must have learned the session well and must have learned the concepts from it. So all the best for the upcoming exam of the CAIIB. And further, let me tell you that from tomorrow itself, you must be starting preparing well for the BFM. For the BFM itself, the full course is available. Along, we will be getting the full course videos. The videos are available in Hindi mixed English language also, and also the English only videos are also available. Plus, you will be getting the case study videos. Plus, you will be getting chapter wise previous year questions. Previous year questions are also available over there. And complimentary, you will be getting the access to the ePDF notes through our Android application. So do enroll right now and further start preparing for the same. Do rate the session. Do rate the session right now. So what policy is being followed in India related to CPI or WPI? CPI is being followed in India. WPI is not being followed. WPI is actually at the wholesaler level. CPI is at the consumer level. So retail prices it is based upon. So CPI is being followed in India. That is related to also said to be core inflation. It is also said to be the core inflation, and WPI is said to be the headline inflation. So that would be all related to this particular video. Thank you so much and all the best to you again, and see you tomorrow in the next video.